What's up everybody, Uncle Gary here, and as we discussed, yes, the Bank of Canada has upped its rate to another 0.25%, or what they say 25 basis points if you're not familiar with that terminology. So I'm going to cover off a few points in this week's Market Minute. It's going to be a little bit more than a minute, but you bear with me. One other point I did want to make is the views expressed in this video are my own. They are not those of my employers, customers, or anybody with which I work. They are purely my own and they are just my opinion. This is not financial advice, so please consult with a financial advisor before making any decisions for yourself. That all being said, as I mentioned, another 25 basis points up. So that's making it pretty uncomfortable for most people because this is happening almost monthly now. So I think the first point that I wanted to land here was don't panic. Many people kind of get themselves wrapped around the axle and start freaking out because things are changing. Yes, they are changing, and yes, it may be severe for some people. It might even be quite significantly, it might indicate quite a significant change in what you're going to do. But the point is, making choices in a panic state isn't going to help. So first off, don't panic. Take a breath, calm down, go out for a walk, whatever the case is, and then make sober and carefully thought out choices. That's point number one. Point number two, the reason this happened, the Bank of Canada's Tiff Macklem did this supposedly. Still, we're seeing high inflation, and they're still trying to bring the rate of the economy down a little bit, slowing things down. So it's not going to feel comfortable, as according to him, when the economy slows, but this is necessary according to them. So I think that's the second point. If you're in a situation now where you're unable to deal effectively with your mortgage payments, you may want to look at refinancing. Adjusting the amortization of your mortgage may be necessary now, and these are some things that you can do once you've revised your budget, once you've looked at what you're actually going to need to spend, moving out some of your amortization and refinancing. There is a caveat though. For many of you, you may be coming off fixed mortgages. I know some people have fixed mortgages, or just maybe you're renewing a mortgage. For those, if you're renewing in 2023, that is, then my suggestion here would be, this is the first time in decades that a fixed rate mortgage may actually be preferable to a variable rate mortgage. I have not been a believer in fixed rates because rates have been coming down for the majority of the last 20-25 years. So fixed rates haven't made a difference. They make a big difference for everyone being able to sleep at night if you don't like your payments changing like what's happening now. So if it's to manage your mental state, fair enough, you always would have preferred fixed rates. But that being said, it might be worth choosing like a 1 or a 2 year fixed rate mortgage so that you can refinance again quicker in a shorter time than a 5-year fixed rate. But either way, what I'm picking up is that the rates at some of the big lenders we're looking at something like about 5.45% for a 3-year fixed, or I think it's 5.29 or 5.3 for a 5-year fixed. The one aspect I did want to mention was home equity lines of credit, or what we call a HELOC. HELOCs, they're available, but there seems to be a very big hesitation on the side of the banks. And what I mean by that is the qualifying rate, the rate at which they want you to prove you can afford to pay back the HELOC. The rate they want you to qualify it is about 9.2, just like it's over 9% now, 9% to qualify for a HELOC. So everyone that was pulling money out of their HELOCs to finance or buy properties or things like that, I think they're definitely putting the stops and putting the screws to that. So that's not going to be happening. And lastly, purchasing. If you're planning on purchasing anything in this year, sales have frankly fallen off a cliff. Everyone is not sure what's going to happen next. So unless you're absolutely dead set pressed to buy something, this may be a time to pause. But you might find there's some really good deals. Sadly, the reality is when the market needs to sell and no one's there to buy, then the price needs to drop. So it might be that you find a good deal, and my suggestion again would be to look at maybe a 1-year fixed or a 2-year fixed mortgage so that you can get a chance to refinance sooner. And a 1-year mortgage has differences, a 1-year fixed rate mortgage, should I say, has differences in that you don't pay the same kind of penalty structure for early termination or early payoff if you do choose to do that. So that's pretty much what I wanted to cover off in this Market Minute. The one thing that's still in the back of my mind that's a little unresolved is the Federal Reserve in the US. We've kind of been front running them. We've been doing stuff and then they seem to follow along. So I'm sure our Bank of Canada in Canada and the Federal Reserve in the US, they must be in conversation fairly regularly, but it does leave me a little unsettled that the US is still saying that they're estimating 75 basis point increases over 2023. So I'm not sure if that's just setting that expectation so the market cools off or not. But what I will say is I think the Bank of Canada will pause and check carefully whether they are doing too much damage to the housing market, the property market, the necessary markets that they're serving, before choosing to raise again or maybe lower later on in the year. So that's the market minute. It's it's not exactly ideal, but my suggestion: don't panic, review your budget, and let's see what happens. Thank you for watching. Please go ahead and like and subscribe, or forward this to someone if you think it would be of value. And if you have not done a budget, or you're not comfortable doing a budget or reviewing your own budget, go ahead and leave a comment in the YouTube comments below. And if there are enough people, what I'll do is I'll actually run a session where we'll join a Zoom, and I'll actually send out a calendar link, and people can join for free, just to go through the mechanics of what it looks like doing your budget or redoing your budget to work out what your financial situation could look like. If that would be helpful, please leave a comment in the YouTube comments, not LinkedIn or Facebook, just on the YouTube, so that I can keep it in one place. And then if that's of interest, I'll go ahead and run that session. Have a good day, and let's keep an eye on the situation. Thank you for watching.